pop in full-year profits. I mean, what else can we say about CSL that hasn't been said already? You know, you were on air when the market first reacted to the news today, Julia, and nothing sort of changed. Happy to pay up for that growth profile going forward.
Look, it was a record day for CSL, the shares hitting an all-time record high, and a key reason why the market's being able to rise so strongly today to that fresh 10-year high that we've seen. And look, what we are seeing is a tightness in plasma supply. If we have a look at the US, there's basically 4 firms that dominate the market and make up about 2/3 of the market there. And what's interesting there is that CSL is the lowest cost plasma supplier there. So it's expanding its collection centres, and I think that's going to be a key feature over the next 18 months. But also, if we have a look at some of the other impacts on its result, HAEGARDA was strong, and this is because of a transition from some legacy IV therapies. But also the flu season was particularly bad. I've got a cold at the moment, but in the Northern Hemisphere, the flu season was bad. And look, this division, it was the first year that it's turned a profit, so great to see that as well. And so CSL, look, the valuations here look a bit concerning. It has a PE ratio of 50, and generally you want to see very strong growth come through. And I guess in recent time we haven't really remembered CSL misstepping, but I guess if you go back in time, I think it was 2011 where they had Octapharma banned over in the EU, and I think we saw the shares falling around about 25% in a year. But for the time being, ticking all the boxes, and the market happy to back it.
Listen, we spoke with the CEO, Paul Perreault, a little bit earlier on. Here's what he had to say about some potential U.S. headwinds.
The headwinds, the slight headwinds, are really in terms of cost, because the economy in the U.S. is actually quite good, and we do compensate donors for their time in the center. And so attracting new donors is really the key to making sure that the plasma continues to flow from these wonderful donors that give this life-saving raw material for patients around the globe.
Let's get back to reports. It's the main game in town. IAG. So we've focused a lot on the positive stories today, clearly because it was such a tailwind for the local market, but not IAG. So you've had time to go through the result. Could it potentially be a case of conservatism coming through for the company as well going forward?
Look, I think this is about the forecast, and it was weaker than market consensus, and that's where it was being punished. And it's forecasting margin growth of 16 to 18%, and given that 2% is a reserve release, that's lower than expected. Look, gross written premium growth of 2 to 4%, that's nothing exciting. And in the actual results, we also saw that the New South Wales compulsory third-party reform lowered the reported gross written premium by $190 million. We know that in New South Wales, legislation was passed in 2017 to try and make CTP insurance cheaper, and of course, Insurance Australia Group, being the largest CTP insurer here in New South Wales, it looks like there's been an impact. But not only that, I think the market's also been disappointed with the capital return. We've seen 3 of its Asian businesses being sold, and an expectation that that capital return was about $200 million more than what was announced today. So the share's down by around about 6% by the end of the session.
Yeah, certainly so. Avio Group. Don't know if you had time to look through that one today, but again, it came out of the gate strong and really continued to be so throughout the day. So give us the detail as to why we saw that sharp, swift reaction and the momentum really continuing through the session.
Sure, I'm not sure if I'd be backing this one. If you have a look at retirement homes, look, they have been given a bad rap this year because of the media reports that we've been seeing, and one of the things that the Avio CEO highlighted was the gap between net tangible assets and the share price, and he mentioned around about a 44% discount. But also, if you have a look at retirement homes, I guess they're competing with housing in some respects. And when you see softness in terms of the main markets of New South Wales as well as Victoria, where most of these retirement villages are, then not only can your clients not sell their family home, I guess, at a shorter period, but their house is there for longer, but also they might get less for their house as well. So I guess when you see property prices are falling, then generally it's a negative. So in this particular result, we saw a big property revaluation, which boosted the result. But I'm thinking that in coming years, in the next 2 or 3 years, that we're going to see the opposite there, that we're not going to see these revaluations upwards. And look, they really make their growth from building these units and supplying more of these units. And in a softer housing market, then you'd expect to see some of that coming under pressure. So yes, a strong result today. I don't know if it's going to last for the next 2 or 3 years.
Well, I like it. Julia Lee, Bell Direct, final word to you when it comes to the market performance. I mean, we've talked about this bull market. We've talked about this push higher from the ASX 200. I mean, when do we start sort of getting a little bit wary of gains like this?
We're at the champagne bottles. We've hit a fresh 10-year high on the market. Not only that, we've closed at the highs of the session, which is a very strong sign for the market. And on a day where we've seen one of the biggest companies on our market, Commonwealth Bank, trading ex-dividend. So, look, it's a very strong result for the market, and it bodes for better days. I guess, larger picture, the market's concerned about when we move from the rising growth, rising inflation picture that we are seeing globally to a rising inflation but slowing growth picture. And so really just watching for that inflection point. But look, in terms of the macroeconomics, it can be a bit of a blunt tool. And our market, very domestically focused, as we've seen from the performance today when we've seen Asian markets coming under pressure, but the Australian market outperforming.